We are going to start, Rachini, good morning. We are going to start a new lesson, that is the Project Appraisal, which means basically the kind of, the final area of Project Appraisal. So far, we have been doing various ancillary inputs relevant to project financing, starting from break-even analysis, working capital, financial, non-financial analysis, and investment tools, right? So those are important in understanding the total, the project appraisal exercise, right? Just to brief how this happens is like, in a nutshell, what it happens is like, normal other lending, like in normal lending, client can come and, ask about a project loan, right? So then what we'll do is, so we'll get him to submit a kind of project proposal. So based on that, and then so we do an evaluation, right? So only difference between the normal lending to project lending is, as we discussed last time also, so it's like futuristic. Every payment and everything is depend on how best the company or firm undertakes the project. So that's the main difference. That general lending, actually, you can, based on the balance sheet or the client past performance would be a better sort of an input for us. But in the project lending, it is not so. It's all futuristic, right? So based on the future, so we need to do. So that's the main difference. So hence, this is futuristics. We need to do so many other things like what we have done previously. Those things will be useful in assessing the project viability. That's a new word coming: feasibility, viability, right? Those are the new words in the project financing. We try to assess the project in several areas and to see whether the project is viable in financing, viable in continuation. So that's what generally we are trying to understand. Since we have a couple of others also join, I think repeat announcement is like I told you last time, the examinations will be done after the revision classes. Revision classes will be starting mid-November, so probably it might go to maybe last week of, say, December also. Then the examination would be after that, probably in December or early January, right? That's one. And number two, as whoever, if you have some friends that if you want to apply for the exams, they can do so through online, or right now the institute has been open so that you can physically come and do, or you can send the online application, though under the late charges, but still it is open. A third one is, I think, presumably you might have been now aware that IBSL Institute have sent us a link. I also put that link here. Actually, that link in the sense that is a link to the Facebook group that we have created, that is about for Bankers 2030, where both examination plus the banking trends has been discussed. There again, IBSL has posted that the link where you can get the past papers, all past papers, free of charge. Because IBSL was to tell us, saying that some people have, collected the IBSL suggested answers and, charge 100 rupees per each to distribute the past papers. So that's, wrong thing to do, no? So hence that IBSL has taken initiative to distribute all past papers through a Google store, and then you can get that, past papers freely utilized. I think we have distributed the link in our WhatsApp group last week or before that. If you have not got it, please check it with your friend, or you can, join the link I have sent to you. Some of your members there also, that there again IBSL has given the link and the Google the past paper link. So please feel free to use it, share it among your friends, I mean, no need to pay any charges because it's free of charge. It includes the 2021, I mean, January paper, the latest paper as well. So when we are discussing, the revision classes or revision, probably we can use those past papers also. That's the kind of, the latest announcement that I need to share with you. Okay. So having said that, so let's move to today's session where project appraisal, right? So start with today. Actually, I have given you 4 documents. One is a presentation, and there are 3 other. So one is basically a detailed read on the project appraisal, and then there is a kind of summarized version of the project appraisal, and then the fourth one could be it's like a checklist in project financing. We are in project cost computation, where if you want to undertake a kind of the project proposal and project cost, there maybe I have given several checklist that the project officer has to check. Though that's not exactly exam relevant, but it is very useful if you are analyzing the project appraisal proposal in your bank. So those are the 4 documents that I have shared with you. So let's start with the presentation where the project appraisal in detail. Right, these are the areas that we try to understand through the project appraisal. So assessment of project in terms of economic and financial viability. I will explain after going through these 4 lines. Lending institutions will make an independent and objective assessment of each and every aspect of the investment proposal. Pre-sanction supervision. Taking a second look critically and carefully by a person who is not involved or connected with it. So these are some of the fundamentals. These are some of the precursors in project appraisal. Let's see one by one. Assessment of project in terms of economic and financial. So generally, whenever we get a loan proposal, we are not very much worried about economic impact, right? Social impact, cultural impact, right? So we are okay if the client can repay the debt with, say, existing financial performance. So that's what in general. But when it comes to the project appraisal, not only the financial viability, capability of client to service the debt in financial terms, we look into other areas. Like when you say economic, it's major and a macro perspective economic, but there are sub classification within that. It could be social, cultural, it could be economical, it could be environmental. There are some other factors also to look into and see whether the project is okay to proceed. Now, example, let's say if you are going to do a highway project. So in highway project, maybe financially we'll say another 10 years or 15 years time, so we can break even. And with the people are using the highway frequently. That's a financial perspective. But in economic perspective, you need to see the employment creation, having highway, how productive as a nation you are. So what could be the environmental impact? Right? What could be the a technical perspective, like when you put that into whether there may be flooding could occur, so there may be earthquakes or something, tremor can taken place, right? So what could be the impact to the environment, to especially flora and fauna? So those things also need to take into. Those will have also cost, economic related cost also there. So that you need to take into account when you are assessing the project. Hope that you are getting not only financial perspective, right? Number 2, lending is, because if I am a lender, I want to do part and parcel of the project, then, right, so I need to do a assessment independently. Then maybe the sponsor will bring it and tell, yes, I am so and so, I want to start this project. This is my contribution. I want maybe 50%, 60% of the contribution from the bank. So having said that, you can't say just, yes, we will proceed with that like other project. Let's say if somebody existing, the businessman comes and tell you, I want a, adjoining land purchase, total cost is 50. I put 10 million, I want a 5 million. So it's a straightway deal. So you might approve 5 million based on his performance and based on his whatever income level. I'm happy with that. But here it's different. You need to do it very objectively independent than what they have submitted, where you look into both financial and economic viabilities. Right? So later you will see what are these financial and economic viabilities in detail assessments, but in general, in a macro level, economically, financially. Then pre-sanction supervision, right? Before granting the loan, before approving the loan. So you need to do a bit of study there. Supervision, observation on the project, because it's huge, it's big. You can't stay at your place and see you approve and go ahead. No, you can't. Working capital loan, yes, you can. Do some assessment, give the money to customers' current account. So that's generally happen. But here it is not so. Here it's a pre-sanction. You need to be with the project upfront, starting financing. Second look critically, maybe the first look with the sponsor. First look, the sponsor is happy, so he might have hired some consultant, done some feasibility reports, and so they're very happy. But as a bank, you try to do independent evaluation on the project. You are not in a hurry, so you need to do it independently, going through detailed project feasibility areas. And then you come up with a kind of a solution. And in conclusion, you're happy with that. So under these circumstances, these conditions, we are there to finance this project. Okay. If you do have any questions, please let me know, right? Right. So basically, if you see it as a function, a project is a function of IGMFTR, and then it further come down to GMELTR. So let's see what are those characters. The project is a function of, right, these parameters, right? What are those, right? Project is a function of IGMFTR. F is E and L. So we'll take one by one. The project success is depend on these parameters. We can take, or we can call this as critical success factors also. Infrastructure. Why infrastructure is important for the successfulness of project? Example, say roads, electricity, water, maybe some transportation, communication, important, right? So they are not the control of the project owner. Say, I am going to do a 3-star hotel in some area, but I can't look into all other infrastructure availability while I am undertaking my project. Let's say the tourist, yes, there should be a motorable roads to come there. There should be adequate communication facilities, like, telecommunication to internet to and all that. The infrastructure, water, electricity should be within or around the site, right? So you can tap and get those things to your project. But if there is no 3-phase electricity for that area, then you are failure in terms of getting the infrastructure. You understand my point? So infrastructure is critical. I mean, whoever is going to do, the ownership is with somebody, but very critical. If you don't have that infrastructure within the vicinity, within the area, then the project that you are going to undertake may not be feasible. That's the importance of I. Government economic policy. It's very important. So government economic policy is important in the sense whether the government is, let's say, pro-export, pro-import, pro-agriculture, pro-tourism, or maybe higher tax charging, rigid taxation policy. So those are directly impacting the project outcome. let's say, if the government is not so keen on bringing down tourists, for example, I mean, say, and then they are not very supporting to facilitate tourist or tourism industry, so then what could be the scenario? So possibly having 3-star, 4-star, 5-star hotel may not be advisable. Why? Because government is not so keen to go ahead with the tourism concept. Or maybe the government is very much keen to bring down goods as imports than promoting local exports, promoting local industries. Then if you are into local industry or export related, possibly you have some issues, right? Because government is more towards imports. So then you might not be to compete with imported goods, commodities. So you need to see what's the government economic policy. Third one, market condition. What do you understand by the market condition? It's a broad word, but you can have some your views. Anybody? What do you understand by the market views, market condition? Sometimes we have learned it in different non-financial tools also. You can have some idea when you say market condition.
Substitutes.
Yeah, or maybe competition, we can put it in that way. So how competitive the market out there, right? Or maybe customer demand supply, right? Or maybe the customers' willingness or purchasing power, right? Or maybe global, local, regional marketing status are something that you need to understand. Like if you see that it's a highly competitive and very limited space in the present market, then somebody coming and doing a new project may not be advisable because very difficult to survive. But vice versa, there is nobody in that industry, nobody doing the same thing. It's a new where other countries are doing that business in a flourishing manner. So there you have a very good market opportunity like that. So market condition, I think since we have done the Porter's 5 forces model, exactly we are talking that here. Actually, you mentioned one thing, so I took it as maybe the total competitiveness. So within that, you can speak about bargaining power, supplier, buyer, competitor, rivalry. So everything come in the condition. So how competitive the market is. So we did a kind of a one example as a team. There again, we try to assess the market competitiveness. Similarly, whether the project is small or big, so we need to see how best the market condition towards a project, whether it's supporting or whether it's encouraging or discouraging, right? Fourth one, entrepreneurs' financial strength. So whether the entrepreneur is capable to start, continue, or run this project. That is entrepreneur's financial strength. It's very important, right? Whether that he can bring the adequate equity towards the project. In case of a shortfall of equity, whether he can bring that into the business, or whether that he can convert his quasi equity to the equity in case of a emergency. Whether that he is in a position to garner the balance, the bank's loans. In case he can maybe a couple of banks, he might have to go to and negotiate and get the things done. That's what entrepreneur's financial is very important, because without that financial capability or capacity, you can't undertake and run the project. Entrepreneur's techno-managerial capability. Entrepreneur's techno-managerial. So that is basically how techno-savvy, how good in technical perspective to start and run this project. Say you are a person who has a lot of experience in, say, paddy milling, for example. but now you are going to do a 5-star hotel. So obviously we see a void in a technical capacity, because if you are coming and asking me to put a higher graded or automated or advanced rice mill, possibly I might say yes, you have the techno managerial capacity. But when you come and say that you are going to put a 5-star hotel, I mean, having gone through your profile, business profile experience, I can't see anything related to hotel industry. So how can you put the effort, expertise which is needed by the hotel construction, run in a hotel? So possibly there is a void. Then we have a question. What he could do is, so instead he intervened, what he could do is, he can bring a very good 1 or 2 people to run, continue this project. So that's acceptable. So like that, I mean to say that if we don't have this thing, and then we are not going to say we are not going to fund, but we need to see whether how best that individual or the sponsor can arrange those things. Based on that, the project viability is going to successful or not. Risk factors. I mean, every business, every financing proposal, right? So every credit proposal has risk factors. I mean, pluses, minuses. So here, there are some inherent risk in the business, in the project. That is financial risk, market risk, technical, political, environmental, economical, I mean, operational. So many things can consider. Because when we talk about the positive side, the flip side of that is a risk. Right? Example, entrepreneur's financial strength is not adequate, obviously create the great risk, financial risk. So there may be some impact towards the environment, obviously creates an environmental risk. So impact to the economy about maybe social or religious or cultural or economical, then it could create economical risk, economic related risk also. So there may be risk factors also there. So if the risk outweigh the benefits, obviously you may not be in a position to proceed with the project. So here, what we have discussed is, later also that you can further understand, what are the critical success factors? What are the dependent variable? What are the important factors that one could consider in undertaking a project? Right? So that basically, these are the factors IGMFT are. So if we get a question like in a project appraisal, what are the areas you would critically look into in assessing the project? So could be the answer. Or maybe somebody would ask him, think about what are the critical success factors in project financing. So these are some of those. I mean, there may be so many, but you can bring your answer accordingly based on the question. Right. Before moving to the next slide, that is about to general understanding about the project financing or project plan. Any question up to now?
So can you tell us pre-sanction supervision?
Yeah, the pre-sanction supervision is like this. Let's say in generally, if a customer coming to you and asking about 10 million, 15 million or 20 million financing, let's say the first one could be working capital. So in that sense, what we could do is you get some down financials, and so you will have some working capital assessment, then you approve it and you disperse it. Sometimes rather than visiting the customer premises, before undertaking that financing, because why? You may be comfortable with customer existing performances, right? Let's say customer is asking for about, say, capital financing to purchase a land, purchase a vehicle. Again, you may not be, very much worried about the customer utilization of that funds, and then based on existing performances, balance sheet strength, PLN strength, you approve and you disperse. Let's say purchasing a land, possibly you issue a check to the seller of the land. If you're purchasing a vehicle, so issue the check to the supplier of the vehicle. So that's it. So very simple in terms of monitoring. I mean, pre-sanction, pre-grant, right? Because anyway, if the customer, let's say, rather than worrying about the futuristic approach, you're comfortable even at existing level, the client can repay the particular debts. But when it comes to the project financing, it is not easy. Hotel, micro hydro project, highway, harbor, so those are big projects. So in the sense, if the nature of the project is big, then the pre-sanction supervision is very much important. I mean, before granting the credit, sometimes you need to visit the project a couple of times, or you need to monitor the performance of the project stage by stage. Let's say putting up a building, you are not giving the money one shot. You have to go by the BOQ, and based on the BOQ, you will grant the loan, right? So we'll ask the customer to bring his equity. We'll ask the customer to bring that equity through your account. So then collectively, you will issue the checks to the suppliers or the whoever who are undertaking the project, like contractors. That's the financial control. Or maybe you might hire the independent person like valuer, engineer within your bank and do a estimate, a status update, validation on the existing construction level. And then you compare with the original budget, whether are we in line with the budget in terms of cost, in terms of time, if there is any lag, and then why it happens, how we are going to rectify like that. So all those things need to be carried out. Why? Because this is complex, long term. If you remember last week, we discussed about the nature and the importance of the project financing. So this is a critical factors, because if they are unable to track or they are unable to proceed as per the agreed timeline, the delays may occur. In result, the repayment delays. Right? So the pre-sanction supervision is a greater necessity in terms of project financing, whereas in other lending, it is not a must, because it's a straightforward. The loan sizes are small, not complex in structuring. Even the repayment also dependent on existing cash flows, not very much important about the futuristic cash flows. Hence, we put a higher weight on pre-sanction supervision in terms of project financing, because it's everything. You start with the clean sheet of paper, and then in future only the building could come up. In future only the building become a hotel. In future only you will market clients and get the cash flows and repay. So in order to achieve to that level, you have to follow whatever each milestone against the budget or against agreed timeline up until completion of the project, marketing of the project, and even the pilot run about 5 to 6 months, the initial period. So that's what we say pre-sanction. So before disbursement of the money, so every time you need to do a maybe visit, follow-up activity, cross-check, validation, status checking, independent opinion. Those things could be the pre-sanction supervision. Is it clear?
Yes, sir. Thank you.
Right. So any other questions? Right. Again, I'm since that some have joined a bit later, a quick announcements. Like last time I mentioned, the examination could be held in early January, or maybe revision classes could be started from mid-November. And then IBSL has issued free of charge all examination papers. I mean, the link has been shared in many groups and forums. If you have not received, I also shared the FB group, which is which discuss about trends in banking kind of thing. There again, IBSL posted that the link, so you can log in into that and share among your friends if you have not already got the papers. But make sure you are not going to pay anything to get the past papers from the particular groups who are operating in FB or whatever, because apparently IBSL learned that people charging some money to give the papers, but it is not necessary now because it's available free of charge. Okay, so now we try to understand some steps of project financing, right? Cost of project and components. That's why I was telling, I have even given you a separate sheet, separate document to understand what are the components, what are the project items, and how we are going to arrive those things. So once we have done this, so later, so we will discuss that tut also. Just to give you an example, like say a client comes and tell, the land cost is this much. But not like other cases in project financing, when you say land, the land cost could be estimated in several ways. One thing is it could be deed price, it could be market price, it could be the price that you are going to purchase from the third party, or the client could already purchase the land and then he wanted to bring it to the business. So then there may be several areas that you have to look into. Say client had purchased in some time back, the land is say 1 acre land, 10 million. Right now value is 15 million. The client come and tell you, so I have a 15 million land, which is my equity. But are you in a position to take that 15 million as his contribution? No, because he has purchased his 10 million. Right now it has appreciated to 15 million, but actual cost he has increased 10. Or maybe the deed price is 8, for example. Valuation is something. Cost of the project is very important. Why? Because the total cost of the project being shared by the sponsor and the bank. So the client actually put say 8 million, but right now value 15. If you take 15 million as the value of the project, then say total cost is 30, land is 15, the rest 15, so we are going to finance it. As example. But actual, his contribution is 8. When you put 15, 23 out of 15 is the bank's contribution, which is very high. Then you can't take as a 15 as the total value incurred by the client. You need to do some rework on that. That's a one scenario. The other one could be, let's say 1 acre, but for the security purpose, you can take that 1 acre value as a security, project security. But the contribution toward the project is, maybe you are going to put up a factory kind of thing, but out of the 160 purchase, 1 acre, only 40 purchase being used for the factory. Then you have to take that 40 purchase cost as a project cost towards the total cost. That you need to do. Say 1 acre is 15 million. Then 40 purchase is the project contribution. Then 15 divided by 4 is 3.75 is the actual cost towards the project. That's another method of looking at the project related cost. That's about land only. Or maybe sometimes the client say land this much, but there may be other related cost also to be added to that. Maybe land development, fencing, clearing. There may be some other cost also. The client may not be knowing that, but you need to discuss with the client and you can put that into also in the project cost computation. Because otherwise what happens is, client can say, so I will purchase that about, total is 8 million. So that's the cost that, for the land. But there may be another 2 million related cost requiring land to bring to a project level. You can't put the building there without leveling, some other developments, right? You need that. For that additional, there may be 1 to 2 million cost. But if you have not recognized at the initial stage, the later you can come across as additional cost of 2 million. Then who is going to bear that? Because initially you have not estimated it correctly. Getting my point? Because very serious stuff. When you say land in terms of purchasing adjoining property for existing business, you don't be so much worried, right? Because it's a 10 million, maybe straight away, not a big deal. Maybe additional 200,000, 300,000, so you can bear it up. But when you are talking about the 5-star hotel, the land only maybe 75 million, and land related other cost could be another 15 million. Valuation to and everything has to be added. So 90 million is the effective cost of the land. That 15 million is big. On top of that construction, so it goes to maybe 1 billion or so. Right? Then somebody has to, bring that 15 million. So better you initially estimate that 75 is the land only, land related or whatever, 15 million. So another whatever together. So altogether 100 million is a land and land development related other cost. So that's what that you are bringing to the project. Then come to the building. Then come to the other infrastructure, a contingency, working capital. So like that, then the cost will go up to that. Then you talk, this is the total cost. 60% borne by the sponsor, 600 million, 400 million in the bank. Then we apportion how much, what areas, like that. So we discuss, before starting financing. Any issue on that? You are clear on that? Right. So then project implementation, I will briefly mention because next slide is also there. It is now, again, very important point. Now, not like purchasing adjoining property, here it takes detailed financing, supervision, plan. Why? Because it's a critical, complex, long-term driven. So you have to do a step-by-step analysis before starting financing. That's one. A step-by-step analysis together with the budgeted or agreed activities, whether you have completed, not any lagging. I mean, what's the revised timelines and like that. So then the implementation is very important for the completion of the project. If not, you are unable to do it properly. Financing plan, as we discussed earlier, who brings the financing? Total equity, equity plus bank, or maybe joint venture or third party or investor would come. So you need to understand. If the equity, yes, don't worry, because it's your money. You bring it. If you go to bank financing, what are the terms and conditions the bank would come up? Whether it's in line with your expectations, right? So within those terms and conditions, only the bank, would undertake financing. If not, bank may not be ready to proceed with the financing. Then conditions and time schedule for release of funds. That's the third one, fourth one. Like pre-sanction supervision, like earlier, there may be so many things that a client has to do before taking the financing. That could be general condition, pre-effective condition, pre-disbursement condition, special condition. So many things we will incorporate because we need to ensure the smooth progress of the project at the completion level also. Or maybe the relation could be directly to the contractor, directly to the suppliers, right? Or maybe part that under the bank accounts, then you directed towards the company, you get the evidences back, right? So there may be a lot of things that you read as conditions. And there's a timeline also. First quarter, second quarter, third quarter. So this is our financing plan, disbursement plans. So based on that, client has to, in agreement and do the financing, do the project construction. Right. This is important again because I briefly mentioned about implementation. So this is in detail what I want to do. Release of funds, monitoring, supervision. Right. So when you say release of funds and monitoring and the supervision is basically about post-sanction. Supervision is the first one. And then why this importance, the supervision and monitoring is important. I basically discussed it because this will ensure the proper implementation of the project. If we are not going to monitor the progress, supervise the progress, then we have an issue in proper completing the project. Then what are the areas, things to be looked for? There may be so many things, technical, financial, those things we will discuss under the each feasibility. There are so many things that you need to understand. Even the marketing could be very important about project implementation. Whether, have we done the market research? Have we in line with the other research undertaken? Right? So those are the things that, you need to be sure of. Then follow-up actions. What are the follow-up actions? Let's say you are in agreement with the sponsor that these activities to be completed by, say, first quarter, second quarter. Now you can see things may not be as expected due to maybe pandemic like COVID, due to flood like natural disasters. So there may be various reasons could impact about the project progress. Then what you could do is you might renegotiate the terms and conditions, the timelines, and then you agree with the client what could be the new timelines, new milestones. And then you try to, follow up it with the new schedule. Because this could happen a cost overrun towards the project. Let's say if I am planning to complete the project by this July, say about a hotel, and then if I am planning to bring down the tourists because this season, that's November, as a peak. But if something happened beyond both parties' control, and if we could not complete by July, what could happen? So now it goes, let's say, October, November. So if we are to complete by October, November, so we miss the tourist season this year. Then our original plan was to repay the debt by interest from January, capital from next July. Now you can't do that. Then you have to restructure your repayment plan. You get what I'm mentioning, right? So now, if this is purchasing adjoining land about 10-15 million, it's not a big deal because they have even adequate money to service it because it doesn't impact heavily. But other than moratorium kind of thing, it's like a no-brainer that you can, understand. But in a project, it is not so. We never know where the impact could come. It could be something, climate change, government changes, like pandemic sort of natural disasters. So many things could come and impact you. So that's why the implementation part is very critical. Planning, feasibility, everything fine. But if you are unable to do the implementation right, then everything go for a 6 because all timelines could go haywire. and then you are unable to get it started, initiated, run as expected, then everything could go prolong, have some issues in repayment. Right, any questions? Right, this is basically evaluation and review is something once we undertake a project cycle. This stage is something where you see what went wrong, what went right exercise, right? So if what are the successes and failures, especially as an independent observer, independent undertaker, independent financer here, bank critically look into what are the pros and cons, what are the successes and failures in the project assessment, appraisal, project financing. So you may have to take the positive or success factors towards the other projects also. Failures, you need to safeguard in case of future financing. That's evaluation and review like all other exercises. Here also you do it, but this is very important. So we also learn from the experience. Maybe our earlier generation, they have done so many projects, and the learnings may be inputs for our evaluations. So that's why we sometimes call, some banks are very good at project financing, like they are pioneers. So why? Because they were doing this business for about a longer period. Now they have come to a level, how to do syndication loan, how to do micro hydro, how to do hydro, how to do like harbor type of projects, right? They know what are the things that they would look into, maybe from the checklist point of view. What are the areas that could be very critical towards project implementation? What type of terms and condition? What are the negotiations, the techniques? So everything maybe come through ages, tested. So it's easy for the new generation to get something and do it. No bigger mistakes now, because we have done it some time back, very positively. Okay, so analyzing the success or failures of the project for relaunching. Finally, basically, project management, right? It's something maybe the overall exercise we call project management. Yeah, your knowledge, skill, techniques, right? So you try to deploy those things towards the project implementation. And activities like planning, budgeting, organizing, like management control, that management functions, these are the things that we do right throughout the project. This is basically different from the commercial operations and the project management, because in a commercial operations, everything is done up to a level where the commercial operations would continue, right? But here, up until the commercial operations, right, the management of the project is very important from the inception to project or the commercial operations started, right? Because it could be something about feasibility study, it could be something about implementation, it could be something post-sanction, the pre-sanction supervision, maybe preview, right? So everything has to be included here. That we call the project management exercise. I mean, there are separate tools even for the project management. Okay, right. So any questions up to now? This is what we are going to do. Next, we are the independent objective assessment from the bank. So what exactly we do when the client bring the project proposal to us? So we try to do an independent evaluation in terms of several areas. That's what we are going to discuss from here onwards. Before that, any questions? Right. Any take-ups here? Any questions? Any suggestions? Any idea on basically what the project appraisal is, sort of? Any thoughts? All clear?
Yes, sir.
Right. So then let's see, these are the type of, the activities we would undertake if the client comes to us, right? So then generally when you say project appraisal, so this is what exactly we try to do. So let's see first what type of activities we do. Generally, this is like similar to what we do for the other loans, but in terms of project appraisal, because the nature impounds are a bit different to the general loans, right? So we try to do it in a different way. So the preliminary discussions with the customer. So it's like the other cases. So we try to have a chat with the client about a project to get an idea, understanding of the project, his experience, expertise, general know-how, right? So just to get an idea about, the project. Let's say it's a 5-star hotel, maybe a very advanced rice mill, or maybe tea factory. So like that, maybe that's the type of, understanding that you try to get. Then perusing the project reports. So sometimes the client might have done a project feasibility report with the support of consultant, maybe the third party. So it might include all what we required from introduction and to feasibility studies, like what the economic impact, market impact, competitor, technical, environmental, and then financial forecast, right? So maybe loan proposal, right? So everything could be included there. So that may be undertaken by the third party. Could be important because you are not 100% dependent on what he has done, but that's a good place to start, good point to start. Then collection of information and facts. So possibly you might get something from the client, but you do it independently. So you might have some previous projects financed, there are progress reports, maybe outside the data about, sector, performance, future outlook, so many things that you can collect it because could relevant to this project. Consultations, whether you have to go to industry experts, valuation expert, engineer, maybe outside sort of, the consultations if necessary, depending on the complexities of the project. So if it's something 500, 600, 1 billion project, and if it's a hotel type, so probably you might have done it earlier. So you need not to go to the expertise because you have in-house something. But something like the condominium, the type of a syndication loan financing port city investment, obviously you need to have some outside consultancy, bank-to-bank consultancy, maybe expertise on the kind of, bit of new port city law sort of thing. If required, you have to go maybe with the concurrence of the client sometimes, and maybe there are kind of some financing or the requirements also to be there. So that's what that you need to do. Based on those information, then you try to do a appraisal. You try to conduct into varying degree, and then you do sort of some appraisal into financial perspective, economic perspective, marketing perspective, so like that. And then customer interview, it should be open and straightforward. So initially you also have a kind of a chat. So based on some evaluation, so you will also have sort of a chat with the client where there you might say, this is our view, our preliminary condition, this is what we expect. And, so then thrash out kind of, the differences, and we try to come to kind of some understanding. Then site inspection. that could not only undertaken at this level, even prior to that, maybe with the preliminary discussion. So you might go and see the site inspector, or with the consultants, valuers and all that, so you might go and get an idea. In a subsequently, like it's an ongoing sort of activity, the site inspection. At the start, halfway through, midway, later, completion, there are several visits need to undertaken in order to assess the project progress, project viability, project status. Finally, it's a kind of a conclusion. So this is a kind of activity as an independent body we would love to carry out, right? So there may be several activities, several the areas one has to do when we do this project appraisal exercise. So those things now we will undertake, we will discuss in detail. So any questions up to now? Anything that it's not clear to you? Right. Then though based on the subject to those activities, this is what exactly we try to do. If you remember correct, we were talking about, we try to ascertain financial and economic viability of the project. In order to do so, you try to do several appraisals towards a project, related to the project. Though we call SME project appraisal, but it's not only the SME, it's generally project appraisal evaluation done by a financial institution. Briefly, market, technical, management, environmental, financial, economic, or legal, there are so many other things. You do evaluation and appraisals. And then, based on that, there may be some risk could come up. Then you propose some mitigation towards that. So based on the risk and mitigations, then you structure the loan with the discussion of the customer. That's a terms and structuring we call. So if everything is happy, then we say we approve the loan subject to these conditions. Then about the implementation will come. So this is generally appraisal part. Once you do the appraisal, implementation is there. Implementation, then you do the monitoring, supervision, or the review, evaluation. So all these activities one can see from the top, and this is project management. So the project management would include from appraisal to implementation to supervision to review, like, right? So under that project management umbrella, we undertake different initiatives. Project appraisal is one of the key. When you say project appraisal, we complete it, and then we can't say the exercise is complete. Then the total implementation part would come. So based on the appraisal condition and structuring, you try to do the implementation of the project. So once you implement it, then it's up to the review, evaluation, the success and failures. Whether it's going right, going wrong, things you have to do, and part of the implementation, the end of the implementation, the reviewing and the monitoring further. Right? So all these things will be seen as a project management. Hope that you have an overall view, and within that, what are the things that we are going to do. So the project appraisal is very critical part in this chain. So the things we have undertaken some weeks back are helpful to do this project appraisal. Just for example, when you say market appraisal, 4+5 process, BCG matrix, product life cycle, important. When you take management appraisal, SWOT analysis could be important. When you take about environmental economic appraisal, pest analysis could be useful. When you say about the technical, the project itself, some technical models could be useful. That's why we learn those things. When it comes to the financial, break-even, working capital, financial projections are important, right? So those are the, the ingredients that is necessary for us to understand the project appraisal, the evaluation. First, let me know, have you, captured the kind of concept before we go to the detailed evaluation on the appraisal? Any issue understanding this? Because hereafter it's a straightforward sort of thing, but up to now, do you have any sense of it? Any difficulty in capturing any sort of missing points in this chain? Any questions? All clear or how?
Clear, sir.
Right. What about others? Judy, Rachini, Taruka, Chandi, Samindri?
Okay, sir.
Clear, sir.
Right.
Okay, sir.
Okay, sir.
Okay. So then basically what, thanks Taruka. So then what you are trying to do is, under each appraisal, we try to see what are the areas that we have to familiar with. Why that we need to do it in detail? Basically, if you take for exam purposes, the examiner could ask us to write a short note on, say, market appraisal, technical appraisal, environmental appraisal, management appraisal. So like that, we may have been asked to write a short note. For that purpose, we need to understand at least 4 or 5 points under each of these area. That's what about examination input. Starting with market appraisal. Sorry. There you have, I think I have taken 12, 13 points, but enough that you know about 4 to 5 points. What exactly you do under the market appraisal, market feasibility, right? So you can, name it in different way, but in terms of market appraisal, what we are trying to do is we try to ensure the status of the market. Whether the market is supporting towards the project. When you are undertaking this market appraisal, obviously you may need product life cycle, PCG matrix, ANSOF matrix, Porter's five forces. There are so many models that we can find out, and you use those things to assess the market feasibility, viability. Now, example, say when undertaking the Porter's five forces, we found as it's a highly competitive market. So if a sponsor wanted to start this project, we found it's highly competitive, possibly we might say the market viability is not so great. There's a high market risk because you are new, you're going to start the project. Before starting your project, it's a high competitive market out there. But if you don't have any alternative to manage that market competitiveness, obviously you would fail in the long run. So that's what we try to get through this market appraisal. In order to do that, the checklist I have given here, these are the areas we would do, we would check. In order to check those things, the above mentioned, the prior mentioned tools could be useful. Hope that you have that link understood. Because we learned about non-financial tools. Those are useful in assessing the particular appraisals. Market, management, technical, environmental, economical, like that. එතකොට ඒ ටික අපි අන්ඩර්ස්ටෑන්ඩ් කරගන්න ඒ ටූල්ස් අපි පාවිච්චි කරගෙන මෙතෙන්ට එනකොට අපි බලනවා මේ මාකට් එක කොච්චර ඇක්සෙප්ටබල්ද නැද්ද. ඒ මාකට් එක ඇක්සෙප්ටබල් නම් තමයි අපි කියන්නේ we are happy to proceed. නැත්නම් අපි කියනවා මාකට් රිස්ක් එකක් මෙතන තියෙනවා. ඉන්ඩස්ට්‍රි රිස්ක් එකක් මෙතන තියෙනවා. So we are not happy to proceed. That's the main aim of undertaking this individual appraisals. Another example. Let's say the client is doing or engage in or planning to engage in say, exporting fish, say EU markets. But right now we hear and we see some developments where European Union and the other EU countries are going to put a stop on GSP+. So possibly we need to think that, this person put enough fish factory or processing factory to export fish to EU markets. Now we see another year or two, there may be some restrictions on exports to EU countries. So if you are a newcomer, if you have planned to export your products dedicated to those countries where you see a risk, that's a political risk, right? Obviously have an impact on the demand. Then you might say it's not advisable to produce these varieties, these species, because we see a danger in time to come. So if you are trying to process a different varieties where intended countries are China too, Middle East too, Korea kind of thing, possibly we can look for that opportunity, look for the proposal. So that's basically, that's how you need to do it in the market appraisal. Right? We try to assess the market position with respect to the project output. In order to do that, we try to use non-financial tools, and the checklist are here. Product, service. What is the product? What is the service? So the usage of the product, where the special features are there, advantages over substitutes, are important things that you would see, right? When your client wanted to, produce something, and the product or the merchandise, we'll see subject to who are going to use that, the durability, after sale service, special features, the bundle packages, or some tasty, health conscious. Then what about the existing products in the market, or competing products versus this product? What about the substitutes available? Advantages over substitutes are very important. So all come yes, then you say superior product, superior service. There you have a plus marks. So like that, each checklist will check against the market. So you need the other tools to support that. Having done all, if you see that a plus in market appraisal, you say we are happy with the market potential. We say average, we say it's a 50-50, you need to do more. You see the financial or other this thing to bring this to next level. Or it's a negative, you might say very difficult, tight market condition, high risk industry or market, so unable to proceed with the project because there is no adequate market potential. This is how you takes the independent call on the particular feasibility study. Demand analysis. That is, what could be the global, a domestic, a regional, right? So basically, what's the present level of demand for the product or service? Maybe you are into the export market, or you are into the local, you are into the regional markets. So you need to understand where is your market and what's the potential. It's like growing demand, it's a stagnate, it's a reducing demand, declining demand. You need to understand. For example, let's say if somebody is going to produce polythene, then we need to think about some polythene brands are now being banned. Okay, if you are into the organic products in terms of agri, it could be very promoting because now the government is also wanted to go into organic, and people also trends change into the organic. Then the demand analysis, like higher demand towards that. You need to understand what the market trends. Supply analysis. Who are the suppliers? Right? Imports, local suppliers, competitors, right? Then export potential analysis, details of other exporting countries. So important to see where you get that supply. Right? If you are getting the supply without a bigger problem, obviously you are in a better situation. Vice versa, if you see your supply is a bit of hard to come by, then you need to know where that you are trying to get it. You're using your network, using your capacity, your net worth. You try to make it a smooth supply towards the factory, towards the product. So sometimes you see that local or the supplies are a bit of hard to come by, but you have very good contacts from some other country where uninterrupted supply or material or whatever level can be brought into towards the project. That's fair enough. Then you would say uninterrupted supply at this is a kind of supplier kind of agreement for the next 3 years. Right? This is the quality level. So compared to competitors, compared to local, so I am managing. So then I can make the kind of product to acceptable levels, whatever as per the standards. So then I am good at getting the supplies. That's a supply analysis. Current market prices, local, imported. So that's very important. So let's say you try to produce based on whatever the production methodologies, and then there may be output, whatever cost plus margin. This is the local price that I am going to put it to the market. Then you need to compare what the present price at the market, whether you can compete with that. If you are a newcomer, there may be chances that the existing players could reduce the price, and then whether you can withstand that. So in case if the government is going to import in a given situation, whether what could be the import price. So maybe the last 5 to 6, you can go to the stats and see whether what is the import price on a particular commodity. Whether if you go to that level, can you survive? Those are the questions that you need to ask critically while doing this independent evaluation under the market or the industry analysis. Hope that you have, got the kind of a points. Any questions?
So excuse me, if you get to answer a question like this, writing a short note,
Yeah.
We need to clarify about the portals, 5 portals, the metric stuff, as well as the in detail things that you have mentioned over here.
No, it's like this. Like say, if they wanted to say about a brief write up on the market appraisal, so you can write 5 points: product, service, demand, supply, current market, and another point. Right? That's a 5 points that you can get the marks. But when you say product and service, you can put an hyphen and say at least what are the area, maybe the special features, advantages, or substitute. That's fine. You need not to go into a very detail for a 1 mark for this product and service. When you say demand analysis, you can say, so you need to check whether what is the demand in terms of globally, domestically, and regionally. That's it. Because one supporting line has to be there when you are trying to do a short note or a in brief description. Because if you are trying to write it in that way, then easily examiner can see what are the points 1, 2, 3, 4, 5. If you have then 5 points that you can get the 5 marks. And again, for each point, you give a 1-line statement. So that's more than enough. Otherwise, when you say product and service, and when you keep it open, then nobody knows what you mean by the product and service. Right? So demand analysis, sometimes we could understand, but better at least you explain it's a demand in terms of customer perspective, supply in terms of a supply perspective. And current market prices, when you say local and imported, so at least then you say you will compare with existing local prices and imported prices of rest of the players together with your the sponsor's price. That's it. To that extent, you need to explain. There may be several points, but you have to select at least 4 or 5, so then you can be comfortable with. Is it okay, Ravini? Rachini?
Yes, sir.
Right.
Yeah, we need to have plenty of writing.
No, don't do it. Don't do it like every time I mention, there are maybe students who are planning to write very para type of answers for this, but don't do it. When you are trying to do it, because specifically they say the point form answers, when you are trying to do a para type of answer, that is itself a disqualification to get the marks. Because some examiners may be going in hard and find the points within that underlining and all that, they try to find it out and give marks, but many are not, because they are advised not to go into detail and check whether you have included the several points within the para. Better you write 1, 2, 3, 4, 5 straight away. These are the 5 points, and maybe at least 1 or 2 you can describe. So that's enough. Right? But otherwise, what happens is since that many students are writing in the point form, if you are trying to write in the detailed answers, that itself consumed your time without any value addition. Because they get 5 marks, you get 5 marks, but you get 5 marks after writing 3/4 of the page, where they will only 5 lines, they get the 5 marks. So it's very important to save your time, and you have to pre-ready with the answers, like maybe what we are doing right now. Then propose marketing arrangements, like pricing policy, discounts, margins, distribution channels, confirm orders, terms of credit, grants, export incentives, rebates, marketing organization of the project, where key personal experience, qualification, facilities, provided. So those are the rest of the checklist that you may go into the market appraisal. Any question?
Sir, in other questions also, do
Yeah.
we have to implement the same
Yes.
same?
Yes, we never, now it's the practice not to write para-type answers, right?
Okay.
So now it's in the exam paper also, they mention answer should be in point form. I know that in case of a definition that you might not be able to write the point form, but all other cases, like let's say maybe give a short note, maybe example, write a short note on, let's say, product, right? We'll take overdraft, right? When you say overdraft, so you can write a para also, but no need to write a para, right? As we discussed on the day 203, when you write a product, what are the points that we are trying to cover. First one could be introduction, or maybe the definition. That's one line. Next could be main features. Third line could be advantages, disadvantages of the product. Fourth line could be risk and mitigants of the product. Fifth line, if it is, then there may be a practical application of the product, where that OD being used for working capital financing on these customers, like, right? Or maybe something related to that. So there are 5 different points: 1, 2, 3, 4, 5. The same thing you can write in half a page para, but thing is, you might not have taken everything, every point counted. But examination, they may say 5 points, 5 marks, 4 marks, 3 marks, like that. When you put in a para, if whoever the marking examiner is unable to track it, all the points, possibly he might say 2-3 points, he found it and he put 3 marks. But whereas you have written 5. So unfortunately, because you have taken a para type answer, which the examiner, the paper itself say no para type answers, so we miss the opportunity. So always go to the point form answers. So that's why I encourage you to have some model examination structures. So always, like when I discussed, I think I have given you, right? So there are 1, 2, 3, 4, there are 5 areas. Like even when we discuss about, the microfinancing, SME lending. So I even have given you some sort of the short type of graphical presentations also. This is the area that we need to be ready. Let's say issues in SME. 1, 2, 3, 4, 5, like that. I mean, don't even the same, the answer could be given in the para type, but better you not. Then you miss the critical points sometimes. When come to here also, market appraisal, let's say you have taken 5 points. 1, 2, 3, 4, 5. And you can also mention what are the important area where if you feel that maybe 1 line is necessary, you can mention. That's how it has to. Is it clear, Taruka?
Yes, sir. Thank
Yeah,
you.
even other papers are similar. When you do financial management, yes, try to do as much as point form answers, because it's there in the paper itself to limit your answers and write your answers in point form. එහෙම කියලා තියෙනවා නම් අපි අනාර්ථේ අපි මේ අර විදිහට ලියන්න අවශ්‍ය වෙන්නේ නැහැ. Then when you say propose marketing arrangements, what are the marketing plan you have? Maybe you try to do through agencies, you try to do direct sales, or through supermarkets, so like that marketing arrangement. Then pricing policy, discounts, margins, very important, right? What maybe cost plus this much, what are the discounts that you are going to give, what type of margins you are giving to. So those are important for us to evaluate the client. If the client says, this is my pricing policy, this is my discount policy, this is my, the margins that I am planning to on these market segments, important. So then I have some other data on existing clients, the projects which I have already financed. So then what happened? Then it is easy to see whether the new guy, the new client, a sponsor is in line with the market. එහෙම නැත්නම් එයාවිල්ලා කියනකොට pricing policy මගේ මෙහෙමයි cost plus මම මෙච්චර තියා ගන්නවා කියලා කිව්වහම but industry එකේ තියෙන්නේ ඊට වඩා වෙනස් නම් මම එයාට කියනවා it is not practical, because you can't run this given the industry is way below. Right? So then it's good that you follow the industry norms. Then distribution channels. What are the distribution channels? Right? So as I was telling among the marketing arrangement also, how we are going to distribute, whether you have your own distribution, you use outsourced distribution, important for us. Own distribution, then we need to know how he is going to do the distribution. Sorry. own distribution, then we need to know whether the client has the capacity to do the own distribution. If not, the client might say, yes, I do own distribution. And then next question is whether you have adequate vehicles. What the cost that you are going to plan on that? You have the people. It's not easy. How we are going to manage the distribution arm? What are the stores? You have a central stores. Are you going to rent it out? ඒ හැම එකකටම cost එකක් එනවා. එතකොට ඒක we need to include in the total cost. That's another exercise of going through this market appraisal. Because though this is qualitative, some of these qualitative points will have a financial impact. Hope you're getting me. Then අපි distribution එක කතා කරොත් මම outsource කරනවා නම් I don't have a bigger trouble on that, because there you have to ensure that some kind of a concrete agreement with these outsource agencies. මෙන්න මෙච්චර දුන්නොත් මට මෙන්න මෙච්චර මෙන්න මේ areas වලට විකුණලා දෙන්න කියන එක විතරයි මට වැදගත් වෙන්නේ. එහෙම නැත්නම් if you are going to run a own distribution arm under you, ඒකට you need to have some cost and infrastructure in place. ඒතර ඒ සල්ලි අතේ තියෙනවද? ඒක are we going to include in the total project cost? මොකද දැන් ඒකට vehicle ගන්න ඕනේ. ඒකට day to day expenses ටිකක් තියෙනවා. ඒ vehicle ටික අපි ගාව නැත්නම් we need to lease out. නැත්නම් we need to outright purchase. ඒතර ඒක total project cost එක උඩට යනවා. දැන් අපි total project cost එකේ ඒ ටික තියාගන්න නැතුව අපි වැඩේ කරලා ඉවර වෙලා then he said that I want to purchase some vehicles කියලා. For that I need to some money කියලා කිව්වොත් are we in a position to do it? No. May not be easy. Right? May not be easy to do it at that point. Then also we need to know about confirm orders and terms of credit. Right? Whether that you have some confirmed buyers, confirmed agreements, confirmed orders, then it's good for him. What's the terms of credit? Debtor period, creditor period, stock holding period, like what we discussed in the working capital financing. This is important. Whether it is in line with the industry. එහෙම නැත්නම් industry එකේට වඩා වෙනස් විදිහට කරනවා නම් why he is going to do that? It incur cost. Then your competitiveness could go down. So those are some of the issues that we need to look into on the market appraisal. Grants, export incentives, rebates. That's from the government end. Is there any chance that you get any grant towards this? When you make a product tag karna na, are we supposed to get some support from the government, which is a boost, right? And then finally, how we are going to organize the marketing department? Skill levels, experience, expertise. How we are going to deploy the team? How we are going to recruit in future? Sometimes, if it is very critical, maybe bank may put a condition to say that when you are hiring the DGM, head of marketing, it could be with the consent of the bank. Bank එකේ consent එක නැතුව කරන්න බෑ කියලා කියන්න පුළුවන්. Because it's important. Right? So that's all about the marketing appraisal. Any question? These are something that further I have included some more things like which come in under market appraisal, not a big area, but there are 15 points that I have mentioned, but at least you need to know 5 different points. Then be ready with that. In case if the examiner wanted us to write a short note on market appraisal, then you are in a position to write it and complete it. Any questions?
Sir, can you brief the process of the market appraisal in short?
Yeah, the process is basically like market appraisal is basically see the potential of the market for the particular product or service, or market feasibility, a capability of the market to run the particular product or service. That's what the overall market appraisal is. In order to carry the market appraisal, we try to do several checklists. To accomplish these checklists, then we do a market appraisal. When we do this detailed checklist analysis, I have given you 15 checklists where each and every thing is important in different way towards the project. So what you have to do is, under the market appraisal, we see the assessment of the status of the completeness of the each checklist. If the things are unfavorable, if the most of the checklists are unfavorable towards the project or the sponsor, we will say we are happy with the market appraisal. It's a successful market. Most of the things are in other way around. We say there is a market risk when undertaking this project. So in order to mitigate the market risk, you need to bring some controls under terms and conditions of the credit proposal. Either the client can use some other feasibilities, other positives to minimize those negatives, or the loan proposal itself will tell you these are the mitigations. Example, say if we think that there's a highly competitive market, then client is initially go for a higher number of products towards the market. You might say, as a phase one, you should not go to mass marketing. If you want to proceed with the product, you have to select at least few segments and start with a small scale as phase one and proceed with that. This is kind of one of the outcomes, because if the negative competition, high competitive market, how you are going to avoid that? So you got a differentiated market. That's a proposal from the bank. Right? So basically, the market appraisal is to see whether how potential is the market for this particular product or service. That's a one-line statement. In order to carry out that, you have to go through, there are detailed checklists. For each checklist item, you see whether what's the positive impact or the negative impact. So higher the positive, you say potential is high. Higher negative, potential is low. Right? Competitiveness is one of them. And maybe the arrangement, experience, and after sales service. So are different items on that. Chagit, is it clear enough?
Yes, sir. Thank you.
Okay. Any other questions? Okay. Now we move to technical appraisal. That's another area where we have to be very much comfortable or very much in control. We are not all projects has the technical evaluation, but some projects has the technical evaluation to great extent. If it is something manufacturing related, technical appraisal is very much important. It's a service oriented. Technical appraisal is important, but not that great like manufacturing. You're getting what I'm mentioning, right? But every project has a technical input, right? So the important here is, when you say technical appraisal, it's different from industry to industry. It could be different from project to project, right? Example, if you take agricultural project, what are the technical areas that you would look into is, example, land utilization, crop calendar, different type of crops, right? And then water methods like drip irrigation. So those are the area that you would look into in the agri project. But if it's in the livestock project, then you have to, bird flow, herd flow. Those are the chances are important in the livestock. Fisheries, then you ponds, tanks, how many, the sort of species in a particular pond, right? The depth of the pond. So those are the important things. Industrial, processing, mining, milling, value addition, quality improvements are different. Construction, totally different about the structural, BOQ, architectural designs, right? Cost per square feet, those things. Marketing projects it's something about, you know, market research related, right? The costing, then about rebates and all that earlier we discussed. So this is basically to give you an understanding about the difficulty in carrying out the technical appraisal. So if you are a project officer, so you need to know, I mean, almost all these areas, because you time to time you get different projects, right? But you need not to have everything in your mind, but there may be a kind of a methodology to go through each and every area before you starting financing the project. Why? Let's say the client comes and, you know, asking a loan to have a, say, agri facility to maybe 10-acre pineapple cultivation. So good that you know about the pineapple cultivation trends. Obviously, there may be a chance that your bank has undertaken several similar projects earlier. And you can take that input. So how many plants per acre? What is the kind of gap that you need to maintain in this thing? What's a fertilizer plan? What is a water plan? So how long that you need to wait for, you know, take the harvest? So what's the utilization like? Maybe you can have 100 sort of plants, but maybe the crop harvesting could be 70%, 80%. So those are the inputs that you can get from in-house. Client also give you a, you know, technical appraisal through his industrial report, but you can compare. So maybe from area to area it could differ, right? From Gampa and those area, you know, it's a very, you know, a good for pineapple cultivation, but maybe the Denia or something may be different. You need to know that also. Maybe seasonal climatic impact and all those things are important. So this basically tells you, I mean, based on the project to project, right? Then the input, maybe the knowledge, expertise required is different. So that's why banks sometimes hire different people with different disciplines as into the project officer grade. It could be agricultural graduates, engineering graduates, marketing graduates, right? Because why? So they need to undertake different projects. So if you are very good in agri and if you have done some agri degree, obviously you can, you know, handle so many projects. I mean, almost all projects with a less complexity, right? If you are engineering background, obviously you are very good at industrial projects, so micro hydro, that type of thing. So if you are again a civil engineer, so you are very much good at construction related projects with, you know, ins and out of the construction industry. Now you can see what are the checklists, what are the things that you would consider. So basically technical appraisal, where you'll see how well the project is technically qualified, right? How best, what's the, you know, the technical capabilities, what's the feasibility of technical items with relation to a project. So these are the checklist. Infrastructure. So as we discussed earlier also, infrastructure is very important in terms of project financing. Say power, other utility, road access, suitability of location, very important. Now, when you say power, it could be single-phased, three-phased, important. Motorable roads, water, as other utilities, very important. So how we are going to dispose solid waste and gas waste, important. Location, so maybe that whether the particular project is going to be located in industrial zone is very much important than in a village. For example, we had a lot of issues subsequently when you are try to put it in a kind of a village where other residents are residing. So infrastructure facility, availability of infrastructure facilities, very important, right? So if not that, sometimes your project may not be feasible or possible to proceed. Then production process. What could be the process that you are going to deploy? The features of that, whether it's like up-to-date technology, whether it's in line with Sri Lankan culture, whether it has a tested method relevant to particular industry. Those are the things that you need to look into. Fixed asset requirement. Whether you are planning to purchase, say, machinery in different types, whether they are in line, they are up to date. So we have the capacity, knowledge to run those things, right? In case of after sales service on those some machines, we need to look into that. Maybe it's good that you bring down some machinery from France or German, world class, but when you put everything here, in case of emergency, at least do we have that somebody to look after, maybe not in Sri Lanka, even at the India, to come and do some support. If not, that's not suitable. Maybe world class, but it's not suitable to Sri Lanka. Maybe the availability of those things, maybe some kind of a machinery replacement, some part replacement, those parts are available. Even at that, සමහරට ප්‍රොජෙක්ට් එක කරගෙන යන අතරමඟ මොනවාරි බ්‍රේක් ඩවුන් එකක් එනවා මේක ගේන්න මට මාස 3ක් යනවා. Then all my supply chain has an impact. එතකොට my competitors will do the business better than me. Then I lose the market. Then I lose finance. I lose cash flows. Ultimately my loan. Right? Then installed capacity and capacity utilization. So the installed capacity would say this much of units per hour, per day, like that. But the capacity utilization is very important. Whether that's a standard. But are we to get the same standard when operating at normal condition? So you can't say 100% capacity operations, and based on that you can't say has a production, sales, rupee value, cash flow, loan servicing might not be work. You have to start with, say, at a lower capacity, 40%, 50% at the year 1. Like that, so year 2, also 5% increase, and so your maximum capacity, you might say 80% within a process of span of 7-8 years. Then what it means is, in case if the client not achieve the 60%, yeah, okay, because you have projected at 40% capacity. This is my output. This is my selling. This is, what I am getting. So at that level, whether I am in a position to service my debt. Good that if you go to 60%, but I assume that 40%. So due to so many limitations, it could be skill level, knowledge, availability of parts, a demand. අපි මෙතන 100% පුළුවන් කියලා කිව්වට හදලා ඉවර වෙලා මෙතන හදලා ස්ටොක් තියාගත්තට වැඩක් නැහැ මාකට් එක නැත්තම්. Because under the market appraisal, we see it's a competitive market. You can't sell at whatever you produce. Maybe initially you go for small ticket size and you capture the market. ඒතකොට ඒකට හරියන්න තමයි production එක හදන්න ඕනේ. Installed capacity could be 100 units per minute, but capacity utilization should be only 30 units. So then you have to reduce the capacity, reduce the inputs. ඒ අනුව තමයි ආගේ technical appraisal එක හදන්න. Input requirement about raw material, right? Whether we have what's suitability, power fuel requirements, 3-phase to diesel to in a standby issue, with the coal power requirement. So a lot of things has to be looked into, because now in a technical perspective, we have to see that if we don't have that capacity in terms of power within the day or throughout the day or whatever required period, obviously it's an impact on the technical arrangements. Let's say if you are in a outside zone, trade zone, then if you try to absorb, if you get the higher electrical consumption from the main grids, will have impact on the dwellers around that. Then they come up with the complaints. So then very difficult to start, your operation and continue operation, which you could have looked into at the early stage of implementation. Or if not that, if you are going to disturb the dwellers, then you need to have a transformer dedicated for your factory. That has to be included in your project plan. Additional transformer, it could be 1 million. එතකොට 1 million cost එක අපි disregard කරලා project එක කරන්න යන්න ගියාම halfway through you at the implementation, see that, I need power. I can't get it from the main grid because people are complaining. So you can't, have your 3 shifts of operation within the day. එතකොට උදේ එකකුයි රෑ එකකුයි කරන්න පුළුවන්, දවල් එකක් කරන්න බෑ because you can't get the power. Then you have to go back to bank and say that, yes, I have an issue. I need an additional transformer for that additional funding. So bank could sometimes say yes or not because it has not been taken into account at the initial stage. It's a fault of the bank plus the client. That's what I'm telling, because when we have this type of a checklist, it is good we compare it with every project requirement. එතකොට මේ checklist එක හැම එකකින් බලනකොට some may be applicable, some may be not applicable, but you are not missing anything good. So if you can do it as a general for all projects, then we are in a better situation, right, to understand this. That's the importance of having a checklist. Then we go further, like labor utilization, technical staff, technical know-how. These are something that is relevant to labor, people related, right? If you know technical know-how, local foreign, that's very important because yes, you are trying to do a very good project, but knowledge may not be right now available in Sri Lanka, or maybe partly with Sri Lanka, partly with some other party. So then what's the arrangement that you are going to have? Whether you have an agreement with these people, and how long, what's the terms of agreement, what is the cost, in case of emergency, how we are going to do it, through online, or you have some office at Sri Lanka, or maybe neighboring India. Very important because this having a bigger impact on your supply chain throughout your value chain, right? Then if you know that this is a new machine and all that, so we are very happy, so they brought down and so it's a world class and all that, fine. But something happened, then nobody to look after, have an impact on the value chain. So like that, maybe the production process, we discussed something a little about here, it's may mention about in detail, right? So today what we have basically discussed is something about project appraisal, and we try to complete 2 areas, that's technical and market. So next week we can go to the management or the entrepreneur appraisal. As I was telling you, what we have seen for last 4-5 papers is that the examiner could ask us to write a short note on what is project financing, what is market appraisal, what is technical appraisal, to that extent, right? So other than that, we haven't seen any difficult question in these areas, but you need to be very much ready with at least 4 or 5 points for each area. So that we try to understand maybe 4 or 5 appraisals, techniques like appraisals or the feasibilities. So that is enough because there are 10 odd feasibility or the appraisals, but maybe key 3 or 4 will be sufficient for the exam purposes, right? So in terms of today's session, any questions? Anything that you need to clear? Right. As I mentioned in the earlier, so I mean, though that IBSL is planning for exams by January or so, but don't wait to that level, since that the online papers also now available with a free of charge. Try to get everything downloaded, keep it saved, and try to pick and choose some selected questions, and then you have your attempt. And if you do have any questions, please let me know, because we can continue this class maybe at end of November or the first week of November, end of October, first week of November. So we have enough time. If you do have any questions, please get ready. Maybe another 2 or 3 weeks time, we will be able to complete the normal sessions, and then we will try to do past papers. But if you do have any questions ready, and then we can do those questions. If not, obviously we will do the last year paper also, since we have undertaken some past paper questions while we doing the sessions. We'll take the last year paper differently, because there may be a similar question could come for the next session as well. Right, any questions from you in again? Then so we can wind it up for today. So thank you very much for joining, and next week so we will continue from the management appraisal, right? And then we will continue maybe another week or two, that we will be able to complete this. And the one more area that we need to do is like sick projects or rehabilitation of the projects. So with that we will be able to complete, and then so we will attempt some past papers, right? So thank you very much, and have a safe week ahead. Okay, take care.
Thank you, sir.
Yes, sir.
Okay.
Stay safe.
Okay.